One of the key ratios to really understand for you and your business when it comes to nailing cash flow is understanding debtor days. If you don't understand what these are, follow my video and I'll explain more. If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. Cash flow, it can kill businesses. So one of the key ratios to understand in helping you with your cash flow, if you are selling on credit terms, is understanding debtor days. So if you're not sure what debtor days are and why they're important, follow my video and I'll explain all. What are debtor days? Debtor days are a calculation to work out exactly how long your customers are taking to pay you. So the calculation is we divide your trade debtors figures or accounts receivables, whichever term you mean, they're both the same. And if you're not sure on debtors or accounts receivable, follow my video here. I explain in this video exactly what they are. So you divide your accounts receivables by your turnover times by 365 days. At that given time on that day, it will tell you how many days it is taking for your customers to pay you. Now, if you're selling on credit terms, you'll give your customers a strict time. You'll say that it needs to be 30, 7, 14, 60 days, whatever your policy is. So one thing you need to nail down straight away, are your customers paying you within your credit terms, or are they taking that bit longer, that bit longer, that bit longer, or that bit longer, where they are getting interest-free money from you? So within your business, if you are selling within credit terms, how long is your credit terms? And also, how long are your debtor days? If you're being really brave, comment below. I'd love to know your answer. With debtor days, this is money that is yours for work that you've done that is in your customer's bank account. Now, I get in any industries you have to give credit terms, otherwise you're not going to get the sale. But what you want is the money as quickly as possible. So when you're looking at debtor days, can you look at extra incentives for your customers to pay in advance or them to pay on completion, where they have some kind of incentive where they go, I'm going to pay this quite early? If they're regular or repeat customers, how do you make sure that they don't take too long to pay, where it all gets a bit comfortable and there's problems where it's just extending? Because what you have to do within your small business is fund your debtor days, because accounts are done on an accruals basis. That basically means income is recognised in your profit and loss account when the invoice is out there, not when it's paid. So when you're looking at debtor days and when you're looking at your total day trade debtors, you have to fund this amount. And this will be either what you've invested in your business, prior reserves, or what you've managed to offset against your trade creditors. So how big are your trade debtors within your business and what impact is that having in cash flow? Because if you've got customers that are pains and are really annoying, it's going to take you time and effort to chase these, because you within your own business have got your own costs to pay for. You've got team costs or subcontractors that you need to pay, otherwise you're going to have mutiny. So when you're looking at the cash flow for your business, if it gets a bit tight, what are your debtor days? Are they in line with credit terms, or are people taking it just too far? Now, everyone likes a bit of a deal, but you want to make sure your customers are paying you so it's not a detriment to your business. Because if you can't pay your team, you can't pay your subcontractors, you are going to hit problems because you're going to run out of cash. So make sure with debtor days is you've got your accounts up to date on a regular basis. It's easy to tick off with cloud accounting with a bank feed. Are you reviewing them, and are you talking to your customers, one, to see if there's a problem, and two, to see do they just need that extra little kick? So when you're chasing your customers, you can send out regular statements, which I think is really important, and you can do that autonomously using packages like Xero. And are you following up with phone calls so they know when you're knocking on their door, you're getting paid quickly? Because we all know in small businesses, sometimes he or she who shouts loudest gets paid first. So what is your current cash flow within your business? How are debtor days impacting for you? And are you having this as one of your KPIs to measure to make sure everything is as lean as possible? So the money is sitting in with your bank account within your business and not your customers. So if I can help with any questions that have spurned from this video, please feel free to click my Calendly link below. I'll take on board any questions you've got. The meeting's on me, and I promise there'll be no pushy sales pitch.